coming back to the subject of branchless banking, before I sort of respond to you, I have a contrarian view on this word branchless, and what I feel very strongly, having worked across many countries and a couple of continents, is that I don't think the branch is going to go away. I think we need to be very clear about what we mean by branchless. I think the branches have been there ever since there have been banks, probably 300 years, and the branches are going to continue. The format of that is probably going to change, and it will change very dramatically. In the future, I think with technology emerging and becoming as strong as it is today, the branch will probably become an integrator of all forms of digital technology. But it will definitely be there. You see large size branches today, ABSA and FNB, etc. in South Africa, very large branches. In the future, they'll all probably become boutique branches, because technology will do a lot of activity which today a face-to-face interaction is required. The branch will in the future become more important for complex products and complex transactions. The simplicity of the transactions will all get taken away and will go into the digital channels. So I think we need to sort of recognize that when we use the word branchless, the branches are not going to go disappear anywhere. They're going to stay. The challenge is going to be, how do you extend that network in a manner where it reaches the base of the pyramid? And the discussion really is about how do you get the base of the pyramid to have access to financial services and solutions. And that's where technology comes in. I've been very excited about it, because mobile banking has been a sort of a red herring for the last 15 years. Everybody talks about it. But it has taken a long while for banks to really crack that business model, to make it reachable to consumers in a manner where even people who did not have the ability to get themselves educated are able to transact on the mobile. And Gerhard spoke a lot about what's happened in Kenya. It's a country that I'm very closely associated with. M-Pesa has actually revolutionized banking in many ways. But some of the examples that I want to raise here are really outside the continent, and which will come here, given the fact that Africa is growing at such a fast pace, and the opportunities for people are growing as cost as standard of living grows. And it really takes me back home. So I come from India, where 2/3 of people really don't have access to basic banking. And the government there, for the last 60 years, has really been pushing a lot of money into social welfare programs. In the past, the issue has been, with no technology available, there were a lot of intermediaries between the government and the end beneficiary of that grant. And therefore, the money never used to reach, or it would reach in probably parts. The way it has got revolutionized today is that the government is today able to use technology to really transfer that money directly into the end user's account without any intermediary in between, using very powerful biometric technology. So, biometrics from a technology standpoint has really revolutionized what I call as G2P, government to person payments. And that's really a big part of the revolution that I've seen in the base of the pyramid, segment, which is changing the behavior, the savings and the credit behavior of millions of people across the world. So, that's really exciting, because in Africa, government aid and international aid is a big part. And that's where really technology, and especially mobile banking, can help get that facility and the service right across to the end consumer in a very smooth and seamless manner.